Now, it's not in my habit to agree with the Wall Street Journal, but Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do.
U.S. stock markets are plunging on fears that President Donald Trump's tariffs on Canada, Mexico, and China will lead to a wider trade war and hurt the economy. Indices are at yearly lows, stocks are writing off tens of percentages, and investors are abandoning the U.S. market in favor of the European one. Find out what to expect and what to watch out for in the current situation with tariffs in this video. On Tuesday, after a 30-day pause, tariffs on the countries bordering the U.S. on the northern and southern borders came into force at 25% and an additional 10% tariff on China. The S&P 500 index, which tracks the 500 largest U.S. companies, has already written down more than 2.5% this week, trading at its lowest level since Trump won the election in November. It's down 8.5% from the absolute peak where the index was on February 18th to today's levels. Retaliatory tariffs from all three affected countries didn't take long to come. Mexican President 𝗕𝗂𝗋 said the country will announce a response on Sunday that will include tariff and non-tariff measures. Canada's Prime Minister, Justin Trudeau, warned Trump that his decision was very stupid. Trump hit back on social media, writing, "Please explain to Canadian Governor Trudeau that if he imposes retaliatory tariffs on the U.S., our reciprocal tariffs will immediately increase by the same amount." The Dow Jones Index fell 1.5% on Monday. On Tuesday, it plunged 1.57%. Combined, over the 2 days, the index slumped 3.07%, or 1,347 points. There is some interesting information related to this. Trump tweeted years ago that if the index fell more than 1,000% in 2 days, the president should be impeached. That has now happened. But that post has been proven to be fraudulent. U.S. retailers and automakers were among the hardest hit by the tariffs. The share price of electronics chain Best Buy, for example, has fallen 16% so far this week. The company had warned earlier on Tuesday that the tariffs would lead to higher prices for its customers. Walmart was also down, but less so. Shares have written down 4%. The high tariffs imposed by the Trump administration could contribute to a global economic meltdown similar to the Great Depression of the 1930s. There is deep concern in the market that this could be the beginning of a downward spiral that will take us into 1930s trade war territory. If you invest at Interactive Brokers or use any other products and are interested in the stocks of the companies behind them, check out 𝗕𝗂𝗶𝟎, where you'll find countless stocks along with their fair price, analyst estimates, insights from other investors, analysis. Well, you'll simply find everything you need to pick stocks like a pro. So, be sure to check it out. The VIX index, an indicator of fear on Wall Street, rose to its highest level this year. It is now still at very high levels above 20 points. Related to this is the fear index, which now shows the value of extreme uncertainty in the stock market. The US dollar, meanwhile, has fallen to its lowest level since December, as investors factor in short-term uncertainty and a potential slowdown in the US economy. The Mexican peso fell slightly against the dollar. The Canadian dollar strengthened slightly. Gold also rose as investors seek more secure assets than equities. We can see how markets work beautifully in these examples. As risk assets, in this case equities, sell off, money moves into the more certain parts of the market. Now it was gold, or government bonds as well. The US ones with a 10-year maturity are up 2.26% since the start of the week. The number of subscribers to our channel is also getting higher and higher, so don't miss any news from the world of stocks. Trump also threatened to impose 25% tariffs on the EU. Europe has promised to respond, but no tariffs have been imposed yet. Also significant for the markets yesterday was the news that President Donald Trump will exempt automakers from his 25% tariffs on Canada and Mexico for 1 month if they comply with the terms of an existing free trade agreement. In response, car maker share prices rose yesterday, with Stellantis gaining 9.24%, Ford adding just under 6%, and Volkswagen gaining 3.5%. So what is Trump doing with all these tariffs? Mexico, Canada, and China are the countries that import the most goods into the U.S. each year. Together, these imports account for more than $1 trillion. The U.S. is struggling with the problem of having fewer exports than imports. This is mainly due to the fact that many U.S. companies manufacture their products outside the U.S. But Trump is pushing for America first, and tariffs could thus help drive more domestic investment and job creation, which Trump is salivating over. Over the past month, we've seen the announcement of some huge projects, like the $500 billion Stargate project to build data centers and support AI. Last week, Apple unveiled a plan to build new factories for its products right here in the United States. The investment is expected to be $500 billion as well. This Monday, Taiwanese company TSMC joined in, investing $100 billion to expand manufacturing in Arizona. This is very good news for the markets, but now investors are rather skeptical about the tariffs imposed and their impact. A trade war is in the air. But in the long run and looking at the U.S. economy, it could have a rather better effect due to more jobs in domestic manufacturing. But currently investors don't believe so much, and many are starting to invest in Europe, which has been underinvested for a long time, and many traders don't even know European stocks properly. Could this be the point where the U.S. market's dominance ends in terms of future returns? What do you think? Discuss it in the comments or directly on 𝗕𝗂𝗶ecie. Good luck with your investments.